Hello, my name is Michael Allman. I'm a financial advisor with Patriot Asset Advisors, and I want to talk today about what some of the tax changes in 2025 may mean for you and your retirement plan. Big tax changes are coming in 2025, and they could have a serious impact on your retirement strategy and planning. Let's break down what's changing and how you can best prepare for this. There were several key provisions from the 2017 Tax Cuts and Jobs Act, or TCJA, that were initially set to expire in 2025, leading to what some had called a precipitous cliff. However, the One Big Beautiful Bill Act, or OBA as some affectionately call it, has made many of these provisions, in fact, permanent, but there are still important planning opportunities in 2025. What this means is that now, more than ever, effective tax planning can result in saving thousands of dollars over the course of your retirement. So what are some of these key changes? Well, let's go through some of them. The first one is with the tax brackets themselves. So as we discussed, the lower tax brackets introduced by the TCJA are now permanent. But depending upon your income level, your effective tax rate may still shift. Planning is still essential in this case. The second key change is in your standard deductions. And here we actually have some good news. And where we were expecting there to be lots of change, there's in fact no changes. The standard deductions remain the same, minus the fact that they will begin to be indexed for inflation. However, there is a temporary bonus for seniors that they can claim as part of their standard deduction that begins in 2026. This, however, is temporary and it only goes through 2028. The third key change is actually in gift and estate tax. The federal and estate gift tax exemption is currently around $14 million per individual, with that set to expire in 2026. However, with OBA, this does remain permanent and actually increases the amount you can contribute up to nearly $15 million. The fourth key change is with Roth and traditional IRA planning. With brackets and deductions stabilized, traditional planning like Roth conversions remain as important as ever. 2025 may be a good window to consider conversion while tax rates remain historically low. So what does all this mean for tax planning? Well, I think the name of the game for anyone looking at retirement and for tax planning is that now is not the time for panic, but for optimization. We had a lot of chaos over the summer, particularly once OBA passed, and a lot of panic was in the marketplace. Now that the dust has settled a little bit and we've seen what some of the changes are, the key remains ever the same. Careful strategy can save thousands of dollars. It also seems that we have a window that's opening up for us to check whether or not Roth conversions make sense, or whether or not we need to look at your gift and charitable donation strategy. There are ways that we can maximize your deductions, again, to save you money in the long run. It's about planning for the long term and making sure that after-tax retirement income is there for you when you need it and it's reliable. The tax landscape is changing, and the earlier you begin to plan, the more options you may have available to you. Remember, yesterday was the best time to begin investing. Today is the next best time.